Feel like these rising interest rates are ruining your plans to purchase your next home? Well, have you ever considered that even though interest rates are up, so is your equity? Okay, I'm talking to the people out there who already own a home and do not have to buy, sell, or move. Regardless of market conditions, there will always be homes for sale due to reasons like job relocation, death, divorce, and more. But what about those of you who don't have to sell, but would like to? You're in a house that no longer fits your needs, whether it's too big, too small, needs a pool, would be better in a different location. You can fill in the blank. But you're very comfortable with your mortgage payment, and you probably have an interest rate that buyers right now might give you their firstborn for. What you need to know is that even though interest rates have risen dramatically, so have home values. So more than likely, your equity is way up. Here's how Bankrate explains equity. Home equity is the portion of your home that you've paid off and own outright. It's the difference between what the home value is worth and how much is still owed on your mortgage. As your home's value increases over the long term and you pay down the principal on the mortgage, your equity stake grows. Basically, equity is how much you can sell your home for minus what you still owe. And equity has grown massively in recent years. According to the FHFA, the Census, and Adam, a property data provider, nearly 2/3, 68.7% of homeowners have either fully paid off their mortgage or have at least 50% equity. Okay, so you have equity in your house. How does that help? Equity only becomes tangible when you take it out, either when you sell or tapping into the value with a cash out refi or a line of credit. And here's your disclaimer of the day. Your home is not an ATM. If you take out equity, be sure to use it towards something that will appreciate in value, like another property. Do not use your equity to purchase a depreciating value, like a car or a boat or some other toy that's not going to be worth anything in 10 years. For purposes of today, I'm going to discuss selling your property. If you're one of the homeowners that is sitting on a ton of equity in your property, when you sell and go to buy something else, you can either pay cash or have a massive down payment, which even put against today's higher interest rates is going to lower your monthly payment. Here's an example. And yes, I went into my MLS and I pulled actual real sales and properties. Let's say in 2013, you bought a 4-bedroom, 2-bath house for $170,000. You did an FHA loan, which required 3.5% down, and your mortgage rate at the time was 3.25%. Your monthly payment with property taxes and insurance is $1,200 a month. Now it's 2023. You have multiple children, you work from home, and your house is wonderful, but a little more space would be nice. You still owe approximately $155,000 on your mortgage, but based on the comps in your neighborhood, you could sell your house tomorrow for about $390,000. And if you sell for $390,000 after you pay off your mortgage, your closing costs, you're gonna walk away with about $205,000 in your pocket. If you were downsizing, you could probably find a 2 to 3 bedroom condo or townhome in our area and just pay cash. But this example is a growing family who also works from home now, so what do? They find a home for sale that has more bedrooms and more square footage. It's been on the market for several weeks, so they're able to negotiate the price from $435,000 to $425,000. They put the $205,000 from the sale of their other home as a down payment on this next home. With a 30-year mortgage at 7.88%, which was the rate the day that this video was recorded, their monthly mortgage is now $1,584. When you factor in for property taxes and insurance, that makes it about $1,900 a month. If this was someone buying the exact same house, but they didn't have equity from a previous sale to bring to the table, let's say they financed it for 30 years and did a 20% down payment. On a purchase price of $425,000, their monthly mortgage would be $2,448 per month. And don't forget taxes and insurance, so now their monthly payment is $2,764. That's an additional monthly amount of $864 compared to the other family that had a property to sell and equity to tap into. If you own a home, you currently may have massive leverage. Your equity may be the tool that allows you to get into your next property right now. Use your home's equity to overcome these rising interest rates. You might be amazed at the opportunities that your equity can unlock. I'm Lindsey Johnson, your resource for all things real estate. See you next time.